guys, my name is Ishika Jain and I welcome you to Brainvibe. Nowadays, investing in real estate is quite challenging for middle class hardworking people, especially for those who live in cities like Mumbai. Everyone wants to invest in real estate. They want to buy a property, but when it comes to buying a property, it eats up all our income and savings. But we have an alternate for this. One can invest in real estate without spending all their income and savings. Yes, you heard me correct. One can invest in real estate with a minimum amount of 50,000 rupees. This is possible through REIT, Real Estate Investment Trust. Today in this video, we will talk about this topic in detail. So stay tuned and keep watching. REITs or Real Estate Investment Trust can be described as a company who owns and operates real estate to generate income. REITs work just like mutual funds. Like mutual funds collect money from investors, in the same way REITs collect money from investors, individuals, institutions in such ways. Like you can invest in a REIT, that is an investment trust, and they will invest in real estate properties like generally commercial properties like offices, buildings, malls, in such ways. REIT earns money from the rent of these property or by selling them. They distribute this money in the form of dividends to its investors. This type of REIT is called equity REIT. There's another type of REIT wherein the real estate investment trust doesn't buy the property. Instead, they give loan to the investors who want to buy them directly. These type of REITs are called mortgage REIT. They earn money in the form of interest income and then they distribute among the investors in the form of dividends. The third type of REIT is hybrid REIT, wherein the investment trusts also buy those property and they can also give loan to the companies or to the institutions who want to buy them and they will give loan to them. Now there are many regulations and rules that a real estate investment trust need to follow. I will explain few of them to you. The first one is REIT has to be registered with SEBI and it will be traded on stock exchange. The second is out of the total asset value, that is whatever amount is collected from the common people, out of that 80% of the amount has to be invested in completed and rent generated properties. Here the risk is less as majority of the amount is decided to come from rental income. Now the remaining 20% will be invested at risky places like under constructed projects or shares of real estate companies. The fourth one is REIT cannot invest in vacant land or agricultural land. The fifth point is REIT cannot invest in any another REIT. Like they can give loan to any another investment trust but they cannot invest in another REIT. The sixth one is if an investment trust has no other plans of a sale proceed, like they don't want to reinvest the sale proceeds, then 90% of the income generated from that should be distributed as dividends among the investors. The seventh one is that the minimum subscription amount for buying any real estate investment trust is 50,000 rupees. Talking about the benefits of REIT, the first one is low entry point. Compared to the direct investment in real estate, the entry point is quite low, that is 50,000 rupees. The second is high liquidity. You can sell some of your units or maybe all of your real estate units whenever you want. Like in direct investment, you need to find a buyer before selling any property. But here there are already many buyers waiting, so you can sell at any point of time. The third one and the most important benefit of REIT is diversification. Now as I said that REITs invest in malls, buildings, offices, so here diversification helps a lot. Like you have invested in one real estate investment trust but your investment is done in multiple places and in multiple cities. Like you have invested in a mall in Mumbai also and in a mall in Pune also. So if the economy of Mumbai gets a little down or something, then the investment done in Pune doesn't get affected much. This can be explained in a better way with the help of COVID scenario. Like you have seen that during COVID, the commercial office spaces were empty due to work from home. So those spaces didn't generate much return. So at this point of time, diversification helps a lot because you have not only just invested in a commercial office, but you have also invested in IT parks, offices, malls, in such places. Okay guys, so I guess I have cleared many of the points about REIT. If you like this video, please give it a big fat thumbs up. Don't forget to subscribe to our channel and also put the bell notifications on so that you get notified whenever we upload our next video. Thank you for watching. See you in the next one.